Welcome to the I Nurture videos.
Hello students, how are you doing today? We shall learn about the key indicators of securities market in this video. Indicators are quantifiable aspects to forecast the future behavior of market indices. Indicators are used in the technical analysis to forecast market trends. So what exactly are these indicators? In simple terms, they are ratios and formulas that explain current gains and losses in stocks and indices. And why do we need them? Because based on these current gains and losses, we can forecast gains in securities markets for short and long runs. Now, why are these predictions required? Who uses them? These predictions support traders and investors in their decisions about the ideal investment time and right lots to trade in. Let me tell you that one of the primary reasons of success in stock trading happens to be this very calculation, that technical analysis we are referring to in this video. There are four key indicators of securities market: index, market capitalization ratio, and turnover ratio. Index is based on an assortment of securities representative of a certain stock exchange of any of its segments. It is formed by choosing a cluster of stocks that are illustrative of the complete market or an identified sector of the market or market segment. Every index has its own methodology of arriving at a calculation, which is typically stated in terms of a variation from a base value. This is why more than the actual numeric value, the percentage change acquires greater significance. The index is valuable in giving statistics about the movements in prices of stocks. Hence, the indices aim to capture the overall behavior of the stock markets, are often indicative of the business sentiment at the macroeconomic level. For example, BSE Sensex, that is formed of 30 top performing companies in the stock market, or Nifty 50 is a cluster of 50 companies trading on NSE. Similarly, there are clusters like BSE Auto, BSE Capital Goods, etc. that represents top performing stocks in specific sectors. Market capitalization is one of the significant features that assist the investor in concluding about the risk and returns associated with investment in share markets. It is the value that shows total worth of all issued shares of the company in the market. Capitalization data supports the investors to select the stock options that meet their diversification objective and risk-bearing capabilities. Let us see one example. A company issues 1,000 shares, out of which 100 are held by the government, 100 by the directors, and 800 available for the public in open market. At the rate of rupees 50 as market price, total market capitalization of the company becomes 1000 multiplied by 50, that is rupees 50,000. So we say that market cap of the company today is rupees 50,000, which is the worth of the shares issued by the company. And free float market cap will be 800 multiplied by 50, that is rupees 40,000. Now you got it. Market capitalization ratio is an important indicator to know if the whole market is overvalued and undervalued. The ratio itself is defined and calculated as market capitalization of stocks with respect to GDP. The outcome of computation is the proportion of GDP that denotes stock market value. The turnover ratio of stock market exhibits how frequently shares are traded. It is computed as the total value of shares traded on the stock exchange during a specific time period with respect to market capitalization at the end of the period. Let us see an example here. The turnover ratio is basically a measure which indicates the trading activity, which is further indicative of the liquidity in the stock markets. This means that a higher turnover, that is, for example, more than 100%, denotes an investment strategy which involves extensive buying and selling of securities. Contrary to this, a low turnover figure ranging in between of 20 to 30% is suggestive of a buy and hold investment strategy. Students, it is very essential to do right computation to predict return on investment in the stock market. we need to take help of such indicators like index, market capitalization ratio and turnover ratio. It helps us analyze the stock behavior and reasonably predict its future behavior.